So it's your host Aman, and today I'll be discussing how you can actually combine CRT with MSNR. We all know CRT as candle range theory, and we know all know MSNR as Malaysian support and resistance, right? So stay tuned and make sure you watch to the end of the video. So yeah, grab a seat and grab a pen. So let's proceed. So let's check what the higher time frame is actually saying. We actually build our direction not by us from higher time frame to see where we're actually moving towards to and where we're actually coming from. So take a look at what happened here. We had a rejection on higher time frame from the strong high. Why is it strong high? You see here we receive of the previous high of that candle, and we had a strong rejection on candlestick right here from a weekly level, right? So we are all selling all to, right? Take a look at your line chart, then you see more to hit. We have that rejection on that time frame on a weekly level, right? See where we are going. So we are looking for more sales to the downside. We're looking for more sales like to the downside. If not for any zones, then we're looking to all these levels to go out here, right? All these levels, right? So but mind you, we're not going to have because you have a deep down sales does not mean it's going to be very straightforward like that on lower time frame. There will be some hindrance and some obstacles that give some retracement to the upside like this, like that to the downside. But on a weekly level, it's just going to show a single leg in movement in price. So let's go to a daily time frame to see what we're dealing with. We're actually dealing with a rejection of a time frame on a weekly level. So you can actually just refine this maybe to one of these upper close key level, right? Yeah, you can actually refine that to this upper close key level because the silver close key levels are also a shape of shape key levels another time frame as well. So now let's pay attention. You see, the viral trend is actually much more bearish in price. Here, we had break of structure. Yeah, we had more movement to the downside, right? After that rejection on the weekly time frame. So we look for more sales, right? We look for more sales. So take a look at what happened here and let's pay attention to the recent price action on daily time frame here. So here we had a rejection here in which market unfortunately did not really come back to tap into that upper close level, right? But here we had our recent rejection here on daily time frame. So let's leverage on this and let's pay attention to what we can actually do with this, right? So paying attention to this on daily time frame. Sorry, on daily time frame here, let me clear this and let's pay attention to the recent price action on daily time frame. I see we have that rejection on daily time frame. So if you go to your H4, this is something very, very nice on your H4. So take a look at this. We had this rejection from a daily time frame, right? We are having this particular rejection on daily time frame. So now, the overall trend is still very much bearish. Take a look at this. We had this rejection as well on H4, right? So the overall trend is still very much bearish. If you go back to your line chart, you see we had the KMR level for a sell. The KMR level is also a shaped key level it's also a upper close key level, right? Rather on a daily time frame level. So now we know what we know about CRT is actually taking out previous candle high and targeting that previous candle low. The moment the second candle actually closed below it, what do I mean? So take a look at this. So how do you combine a MSNR with MSNR, Malaysian support and resistance with CRT, right? So this is how you go about it. The major thing is that you are to target. There's a particular key level you are looking to sell from, right? So and we have a candle range forming like this, some sort of a candle like this, giving us something like this, right? So you have some sort of something like this, right? Giving us kind of movement like this, right? So we had the previous week the week of that particular it means that H4 candle or H1 candle, right? So the high and the low of that candles, right? So this is the high and the low of the candle, right? So we are targeted to take out the buy side liquidity first or the sell side liquidity as the case may be. So if any of this liquidity side actually got taken out first, right? Yeah. So now we add the high there, the other high there of this particular candle, right? And the low, which is actually our target in the selling scenario. And for a buying scenario, the same logic, but vice versa, right? So now, take a look at what happened here. So now we are looking out to take out this particular high and tap into this A-shaped key level in a nutshell. That's what we are looking out to do. So we are looking out to take out this particular high, right? And tap into this A-shaped key level, right? Then dump to the downside A-shaped key level, then dump to take out this particular low out, right? But mind you, it's not going to be that fast and it's not going to be that straight, right? So what we see in this course is actually something like this. So we are to expect some sort of turtle soup, yeah, or taking out of previous high, then close it short below. What do I mean? So we had this particular movement in price that will take out this particular candlestick high. It's going to something like this. We have you have some sort of a break creation of that high that actually got in that purged that particular previous daily high, right, and tap into that shape level. Yeah, and we anticipate a break of that previous low, right? Then you use the model one for the continuation to take out that particular low out, right? So the model one is actually a candlestick that actually that swept that previous high here and purge into that particular level. So you use the whole candlestick. This is actually the shape of that particular previous high, right? So we have the model one is some sort of a candlestick that actually give us that deep retracement to the downside and use it as an entry. The SL is going to be below here, or your second entry for this kind of thing is actually a ABC pattern. It's like a MSNR entry as well, like a ABC pattern. You have a strong high or a strong blue and a liquidity resting very close to it. A strong eye is the eye that actually has a sweep and a break of structure, right? So we saw that previous eye, right? Then we had a break of structure to the downside. Then we had an engineered liquidity very close to it. Then we use some sort of something like this, right? Then we are targeting that external low as well, right? Do you understand? So with that being said, we had the sweep of that previous eye. We had the sweep of that previous eye, right? Except this one. Except that particular previous high, and we had a break of structure to the downside. So we had this particular break of structure to the downside like that, and we had an engineered liquidity very close to it, right? So we had this ABC pattern formed already. So and in alignment with our candle break theory as well. So now take a look at what happened here. Take a look at what happened here. So take a look at this. So we're actually getting from a higher time frame level here, right? Or a decision from a higher time frame level. So take a look at that H4 range that we had. You had this particular H4 range here. You had this one here to here. So how do you find entry on this particular kind of thing? So on this kind of entries, how do you find them? So you'll go back to your it's even more dumping. So you just switch time frame to a lower time frame, like 15 minutes. Yeah. From a 4 hour to 15 minute 15 minute time frame, right? So take a look at what happened here. So this already has a feed we're actually looking out for on the candlestick, right? So take a look at that. You had a sip of that previous high, then we had a break of structure. I know some people will say that, okay, why am I not marking here as a break of structure or even here? But because if you check your light chart, you'll see you've already had a break of structure here. You break this structure and you even break this one. So this makes this high a very strong high, right? So you had that one, right? So once you have that, let's take a look at what happened here. We have a strong high and engineer liquidity. Then from that candle range high to that candle range low. So take a look at what happened here. You have to place your entry here. Then you have to target that particular H4 level, your entry SL below above that particular week. So this is actually a 10-hour trade, right? It's actually a 10-hour trade. And mind you, this is actually enough. Yeah, this is more than enough, a 10-hour trade. Yeah, and it gives us a very straight and a very downward movement in price. So thank you very much for staying to the end of the video. And yeah, I'm hoping to see you in the next video. And make sure you subscribe and make sure you follow up and make sure you turn on notification. Thank you very much once again, guys. Have a great day. Bye.